learned in our past past sections. We've had two previous sections already. So I randomly call people for them to share just a few on what they've learned already. So I think from my end, the first person on my list would be is it Maxiklin? Please, if you can do us the honors of sharing what you learned from the previous two sections. Thank you. Maxiklin, please, are you there? Okay, then please, if Maxi, I think he just left the call. Then, Philip, can you share with us what you learned from the previous two sections?
Yeah, hello. Can I be heard? Hello.
Hello, please. We are listening.
All right. All right. Good evening. For the last meeting, I wasn't able to join. I wasn't part of the group. So for the last two sessions, the initial one, I got to learn about the crypto wallet, the online wallet, the mobile wallet, the web wallet, as well as the browser extension wallet, and also the architecture of the blockchain structure. Yeah. So, and also the types of blockchain. I think there was public, private, and I think a hybrid as well. That was what I got from the last two sessions, and from uh, characteristics of blockchain, which 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 was described that it's very transparent and also it's decentralized as well as it's secure. secure. That's what I took from there.
Hello, Philip. Thanks for sharing. Rachel, can you also share what you learned from the previous two sections? Hello, Rachel. Hello, Rachel. I think we have Mexiclan back on the line. Please, Mexiclan, I was asking if you can share what you learned from the previous two sections. Just a brief one for us to proceed to today's section. And then also, whilst we are waiting for others to join, like this can be a recap section and interactive section before we proceed to today's section. Okay, it seems Mexiclan is far away from the phone. Miss Chioma, please, can you enlighten us on what you captured from the previous two sections?
Hello, hello, Courage. Did you call me?
Yes, please, I did. I was asking if you can enlighten us on what you got from the previous two sections.
Oh, okay. I think well done. I think so far it's been more of um intro to what blockchain is, and that's for the first session, and then last session was more of risk, virtual assets risk, and how to. It was more of compliance, money laundering, and financial crimes that can be done using virtual assets, and how to kind of control them. That's like a high level summary of that. Well done.
Okay, thank you for sharing, Miss Chioma. Um, if Oge is with us, please, I was asking for, we are doing a short recap session. So, Oge, if you can share what you captured from the previous two sections with us, if you are with us, please. Okay. Please, if Oge is not with us, then I would move on to Afebia. If you can share a little of what you captured from our previous two sections with us, please. Okay, then if no one has a tick yet, then we would move on into today's section. So good evening once again, and welcome to week 3 of A&D Forensic Ghana Internal Bootcamp. Over the past two sections, we've built a strong foundation, starting from blockchain fundamentals and then moving into crypto-related financial crime risk. Today, we will delve deeper into operational side of the ecosystem, how exchanges, wallets, and VAPs actually function in practice. This section is particularly important because understanding how these players operate is what allows us to identify where control points exist and where risk can slip through. In compliance, if you don't understand operations, you can't completely assess risk. So today's section will be very interactive. I'll be calling on a few people to share thoughts, so everyone should stay engaged. By the end of today's section, everyone would clearly understand how exchanges function, how funds move across ecosystem, and a lot more. With that being said, I would invite Nana Osei Bonsu to take us through today's section. Nana, if you are with us, over to you, please.
All right, so thank you very much, Courage, for the warm introduction. I'd like to say good evening to everyone. Good evening to everyone
Good
who's
evening,
with us
Nana.
today. All right, so this is week 3 of A&D Forensics Ghana Virtual Assets Bootcamp. And so far, we've built a strong foundation, beginning with week 1, where we dealt with blockchain fundamentals, and then last week, where we also dealt with understanding crypto-related financial crime risk. So this week, we'll be looking at how exchanges, virtual asset service providers, which we call VASP, and wallets operate. Now, these are not just the technical components of it. They are actually the core infrastructure of the crypto ecosystem. Every single transaction, whether buying, selling, or transferring, involves one or more of these players. So what we are doing today is breaking down what really happens when someone says, I bought Bitcoin or I sent crypto. Okay, so by close of today's session, every one of us, I believe, should be able to explain the differences between custodial and non-custodial wallets and show understanding of how crypto exchanges operate and how users move funds across the ecosystem. And finally, where compliance and AML risk appear. The last point is the most important because that's where your value as compliance professionals comes in. So we'll begin with what a virtual asset service provider is.
That is, what is a VASP? The Financial Action Task Force, which popularly known as the FATF, defines VASP as entities that provide services involving digital assets. The term is introduced by FATF to categorize businesses operating in the crypto space. So instead of saying crypto company, crypto companies, regulators will say VASP. And this is important because regulation applies at this level. So when we talk about exchanges, wallet providers, brokers, payment processors, all of these are VASP. They are all virtual asset service providers. As you can see, we have example of cryptocurrency exchanges, including Binance, Coinbase, Kraken, and for those of us in Ghana, Bit Africa. You have custodian wallet service providers, which are the Coinbase, Custody, Fireblocks, BitGo, and then crypto brokers. Brokers are those who facilitate trades, those who make the trades happen. Those are the brokers. So we have Genesis, Galaxy Digital, B2C2, and then crypto payment processors who are the enablers of transactions. All right, so we'll move on to the key players in the crypto ecosystem. We have users. Philip has his hand up.
Yeah, Nana, thank you. Please, can you come again with the brokers aspect?
Okay. So I mentioned that the brokers are also players in the what we call the crypto ecosystem, and those are indeed those are the facilitators of trades, trades, exchanges. Philip.
Okay, yeah, so I get it, but understanding that point, does it mean, okay, let's go ahead. Maybe at the end of the day, you address my question.
All right, thank you. All right, so we're moving on to the players in the ecosystem. And it begins with the users, the customers. I mean, those who would want to participate in the ecosystem, who would want to trade, who would want to buy crypto, who would want to keep, who would want to sell. Those are the customers. And then banks, that's because it begins with fiat. It first begins with fiat. You have to exchange your fiat for crypto. So you need banks or payment systems. And then crypto exchanges, that's where on and off ramping occurs. When I say on and off ramping, on ramping means that's where we convert cash. You exchange your cash for crypto. And off ramping is where the reverse conversion. You convert crypto into cash or fiat, as we call it. And then we have wallet providers and then the blockchain network itself, which is the underlying infrastructure. So as you can see from the diagram here, it shows the actual flow of funds or money. It begins with the user who interacts with the banking system. That's your fiat on ramp. That's where the process begins, your fiat on ramp. From there, funds move into an exchange where crypto is bought. So you buy the crypto with your fiat, and then it moves into wallets, either custodial or non-custodial. We have two types of wallets. We have custodial and non-custodial. I'll be looking at that. And finally, the blockchain architect network itself, which is the underlying infrastructure, like I've mentioned earlier. Now, what is worthy of note here is the AML checkpoint. See, banks perform KYC, know your customer, and then exchanges perform KYC and transaction monitoring. Then the blockchain activity is also monitored using blockchain analytic tools. So we'll also be looking at all of that. So compliance, as you can see from here, is layered. So we'll proceed to how crypto exchanges work. So the crypto exchange is essentially a marketplace, like we all understand the traditional marketplace. It connects buyers and sellers and also allows users to trade digital assets. But beyond that, exchanges are also businesses. They generate revenue as the primary goal of every business entity would have to make profit. So they did generate revenue. So they earn from trading fees, withdrawal fees, listing fees for new tokens, and institutional services. So examples of exchanges are Binance, Coinbase, Bybit, Bit Africa, and many others. So moving on, to what a crypto wallet is. Can anybody share his or her understanding of what a crypto wallet is? Okay, Philip, go ahead.
All right, so the wallet is just as said, like the normal wallet. But this time around, this is software or this on the internet. That's to keep your cryptocurrency in. That's how
Can you please come again? Your line was breaking from my end.
all right, sure. Is it clear?
Yeah,
So let's say it's an online pocket. Let me put it that way. An online pocket where you store your crypto assets or your crypto money.
okay. Well, that's quite close, but the wallet actually does not store crypto per se. We'll look into that. So as you can see from the slide, a crypto wallet is a software or hardware interface that manages cryptographic keys and enable users to interact with the blockchain networks. And this is where many people actually get confused. A wallet doesn't actually store crypto. What it does is it stores keys that give access to the blockchain. And talking about keys, we have two key elements. We have a public key, which is the wallet address used to receive funds. And then we have a private key, that is a secret key used to authorize transactions. So the rule in crypto is that whoever controls the private key controls the assets. As if you have your private key, if you have your private key, to the assets, what it means is that you have absolute control of it. But if you do not have it, you don't have any control. And there are two types of wallets that we'll be looking at. And now this is where clear ownership becomes. This is where clear ownership becomes obvious. So the custodial wallet is the platform that controls your private keys. The custodial wallet, if you understand, custodial private keys are controlled by a third party. It's outside your personal control. You don't have access to it. And the non-custodial wallet, otherwise of the custodial wallet, what it means is the user controls the private keys. So that means full ownership. If the user controls the private keys, he has absolute and total control over the digital assets. So the difference is not about the wallet interface per se. So it's about control and responsibility. And as you can see here, examples of custodial wallets are Coinbase wallet accounts, exchange wallets, most already dead. Binance, Bybit, BitAfrica, like we have mentioned earlier. And we have examples of non-custodial wallets being MetaMask, Trust Wallet, Ledger hardware wallets, as we have the hardware wallets like Trezor and those things. Those are non-custodial wallets. And we have easy, beginner-friendly. We have beginner-friendly as an advantage of the custodial wallet and recovery options. We also have full asset control as an advantage for the non-custodial wallet. The risk for the use of custodial wallets is dependent on the particular platform. And the risk for the use of a non-custodial wallet, I mean, as you can see here, is essentially once you lose your keys, you lose access to the assets. All right, so we will also have centralized exchanges here, which operate similarly. Yes, Philip.
So are you saying the non-custodial doesn't deal with any platform? But I saw some examples like the leisure and the trust. But are they also not platform?
Of course, they are platforms, but then what it means is that the non-custodial wallet essentially allows peer-to-peer trades. They allow direct interactions with peers without an intermediary. If do you understand?
Yeah, I guess that.
Okay, so we look at centralized exchanges. So centralized exchanges operate similarly to what we all know to be the traditional financial institutions. And most exchanges today are centralized, meaning they are controlled by a company. They operate very similarly to banks or the other financial institutions, as I've mentioned. They hold user funds, they require KYC, and they implement compliance programs. And we have advantages being high liquidity, user-friendly, customer support, and of course, the obvious risk for a centralized exchange is you do not control the private keys. All right, so these are the examples of custodial and non-custodial wallets. And uh, if I may ask, from a compliance perspective, which one of these wallets do you think creates more challenges? The question which is open to everybody. Which amongst these custodial wallets and non-custodial wallets, which presents more compliance challenges?
I think the non-custodial.
Can you come again,
Okay.
Philip? What did you say, Philip?
Yeah, no, no. I said I think the non-custodial, non-custodial.
Okay, okay, okay. And Benshak's hand is up. I'd like to hear from you. Meshach, I'd like to hear from you.
Yes. I was going to say yes. I was, yes. Hello.
Okay, so if I heard clearly, you were seconding Philip, right? All right. So I don't think the line is quite too clear from Meshach's end. We'll proceed. So now we'll look at the typical transaction flow in the crypto ecosystem. And this is how a common transaction flow looks like. It begins with a customer. It begins with a customer, then to the bank or payment system, and then exchange, as I've explained earlier, for on and off ramping. Then the blockchain network, which is the underlying infrastructure, and then the wallets, which essentially controls the assets. And at this stage, responsibility shifts. When customer moves to bank, as we explained earlier, the bank does KYC, AML responsibility shifts, and then to the exchange, KYC and transaction monitoring are conducted, and then to the blockchain, where blockchain analytic tools are also used to analyze movements of funds. And that's where risk sets in. As the responsibility shifts, it comes with its own set of risk. And we'll look at risk assessment next week. All right, so we'll look at the key compliance and risk points. That is risk areas where compliance teams are supposed to monitor. And these areas are anonymous wallet transfers, interactions with sanctioned wallets or addresses, and then mixing services or tumblers, and high risk jurisdictions, unusual transaction patterns. These are areas where compliance teams are supposed to critically look at. And then there are blockchain analytics tools, like I mentioned earlier, which helps to identify these risk. And examples are Chainalysis, TRM Labs, Electric and Blockchain Intelligence Group. So even though crypto is pseudonymous, it is not invisible. So the key takeaway is that crypto transactions are traceable. traceable, but visibility depends on where you are in the ecosystem. Right. So coming close to the end of today's session, I'd like to look at building safer financial systems with A&B forensics. And for us at A&B Forensics, we are Africa's leading blockchain intelligence service provider. We work with banks, fintechs, regulators, and VAPs to build practical, resilient, and future-ready compliance systems. And parts of our core services are AML training, which are practical, regulator-aligned training for compliance teams, independent AML audits, risk-based reviews of AML frameworks, controls, and reporting systems, smart contract audits, blockchain forensics and investigations, and of course, professional certification and capacity building. We run the CCI, which is a Certified Cryptocurrency Investigator Professional course, and then the Certified Cryptocurrency Compliance Specialist program. So this is where I'd like to draw the curtain on today's session on how vast exchanges and wallets ends. And at this point, I'd like to invite questions. Thank you.
And thank you very much, Nana, for that educative presentation. Please, like you mentioned, you're welcoming questions. So if you have questions or any suggestions at this juncture, it will be welcome. Thank you. Okay, Meshach.
Yeah, thank you. Good evening, and thanks once again. I'm thinking that maybe in subsequent sessions we could maybe look at case studies, so it deepens our understanding and appreciation. We could work through a sample case of maybe a transaction, and maybe with the guidance, it helps us to really appreciate the flow, and then it helps us with how the training has also gone. My second comment has to do with, in the case of a normal bank transfer where you do your AML reviews and then you're able to determine at the various points where you can raise a suspicious transaction and file to the FIU. I don't know whether in this case too, the various touch points or the various integral points or parties have relevant supervisory bodies that you can engage or report to. For example, in the case of a bank transaction, if we are dealing with a bank, you know that there is the central bank there, or if you are dealing with a city bank where there are concerns with a transaction, you need to follow up. At least you know that if it is in the US, you have the US central body there. In the case of crypto, as you follow through the change, do we have their respective supervisory or licensing bodies also in place? Thank you.
All right, thank you very much, Meshach. One, for the positive feedback, which bordered on having to deal with cases as we run our presentations. I think that's a critical point that we'll be looking at going forward. Thank you very much for that input. And on the second question, yes, of course, there are regulatory institutions. For instance, the central banks or various jurisdictions where crypto has a regulatory regime are the regulators. Central banks will have the Securities and Exchanges Commission, and an FIU, as we have in Nigeria, who is the Financial Intelligence Unit. The FIC will have FIC in Ghana. So just as it is done in traditional banking, like we were explaining. The same is replicated in the crypto space as well. Thank you.
Thanks.
Okay, and Meshach, your hand is still up. Do you have any other question again, or I think is it from the previous one?
Yes, please, the previous one. Thank you.
Okay, please, any more questions? Then, if there is none, I think we just have a brief interactive section by let's say randomly pick some few people to for them to share their views on what they've learned today. So, starting from Watson, if you can share with us what you captured today from Lana's presentation, please.
Yeah, so apparently I joined late. Sorry for that. But a few things that I was able to grasp was that providing a safer financial system with A&D, we have AML and CFT training, and also independent AML audits. We also have smart contract audits and others. So basically, that was what I grasped.
Okay, thank you very much, Watson. Philip, can you do us the same honors by telling us what you captured from today's section?
Okay. All right. So I also got, I took away the fact that that you have to get to cash. Also, I get to know of the term on and off ramping. Also, the fact that blockchain has analytic tools that also identify risk or flag risk with transfers and all that. Some of which is the chain analysis and having the PIP. Yeah. So that's what I went to cover. And also there are brokers within the ecosystem of blockchain.
Thank you very much, Philip. And please, do anyone have any additional question or any additional top up? As we are coming to an end for today's session. Any question or addition that you'd like to add?
Um, hello, sorry.
Yes, please.
Yeah, and so I wanted to ask if it's possible the recording will be shared. I don't know if it's done already.
Okay,
If it's
it will be done,
possible.
please. We will share it, please. Okay, please. Thank you. If there is no question nor suggestions, we'd like to thank you all for joining today's section. See you. We'll be meeting same time next week for another informative and educative section on another topic. So, using the same link. With that being said, I think we can say bye bye to you all for today's section, and see you same time next week.
All right. Thank you.